Bitcoin has been consolidating all weekend. Is this the calm before the storm? And are you ready for Bitcoin's next big move? Hey guys, it's Keith Allen, and been a busy day. So sorry I didn't get to you earlier today, but really, quite honestly, was waiting for anything to happen, right? And we haven't seen a whole lot going on here, and probably with good reason, right? So obviously, it looks like we are in a consolidation zone. So let me get busy and first just knock out the housekeeping real quick and just remind you that I'm not a financial advisor. I don't provide financial advice of any way, shape, or form. Nothing I say or share should be considered trading or investment advice. Trading is risky. Do your own research. Never risk more than you can afford to lose. Let's get right into a screen share here and start looking at some charts here. Uh, we've of course been chopping through the weekend. I actually been chopping since we saw price breaking down, gosh, over a week ago now at this point, right? So uh, let's get into fire charts here, and we can kind of see the weekend price action and really beyond since the middle of the month. We've just been kind of chopping in this range here. And no breakdown, no breakout really at this point, right? So if we move over to the candle chart, we can see obviously some big things to be focused on here. Number one, we have a monthly close coming up on us here tomorrow, right? So tomorrow's the last day of the month. 1 day, 4 hours if we want to get technical here, but nonetheless, for the U.S. market, this is what we're looking at, and I will be, as always, looking for more trend precognition signals. I don't know that we're going to get one. Seems like we might just see a continuation of this trend, as the A1 slope line is indicating that momentum's still going that way. Now, we could see a reversion right at the close, and that's entirely possible. But we'll have to wait and see. I don't think we're going to see a new signal unless we have a hard reversion coming. And there are some things that could actually stimulate that, right? What is the catalyst that could send things moving? What is the catalyst that could really push price to break out or break down? Well, number one, monthly closes tend to come with some volatility, right? That is without question. Number two, we have a brand new, for the first time ever, Bitcoin and ETH spot ETFs launching in Hong Kong well, it depends on what time zone you're in, but that's on April 30th, the last day of the month, which for me here in the US is going to be tomorrow. For those in Hong Kong, we're talking, the overnight hours for us. So that market is going to open here in the next several hours, and so we could see some buying volume coming off of that. Now, I personally am not expecting, and this is a bit of this might be a little confusing, right? So obviously we've had the ETF flows that, as for whatever it's worth, whatever they've been here in the US. And gosh, I wish I had the full chart here to display this. But for those of you who don't remember, or may not have been watching it as closely, the ETFs were approved on January 10th, right? So I'm going to scroll things back here, and we're gonna take a look at this a little bit, because that's the wrong chart. Let's do this, because we had a breakdown after that. It was expected that price was just going to take off after that. There was a big discussion over whether it was going to be a sell the news type of event, which it ended up being, but not for the reasons that everybody thought. What ended up happening, let's get, I guess maybe a weekly might show up better, or even daily. We could see it here on January 10th. It was approved, right? So that was way back here when we were in a different range, right? We saw price pumping out in December. We had the approval on January 10th, and everybody got excited, and then price dumped. Now, why did it dump? The biggest difference, I think, between the launch of the U.S. Bitcoin spot ETFs and what we're going to see coming out of Hong Kong is Grayscale. Grayscale tipped the scales. And how do they tip the scales? Well, Grayscale was different than all of the other ETFs that launched. All the other ETFs were brand new products, first-time products coming to market. The Grayscale ETF was a different situation, because those folks, many of them came in, hey, Game Zone, good to have you with me. And welcome to everybody else who's joining the stream here now. Um, Grayscale was really a conversion from the Grayscale Bitcoin Trust. And after the FTX debacle in November of 2022, we saw the market really went into a tailspin, right? And so Grayscale locked down all of the assets in that Grayscale Bitcoin Trust, and they converted it into a spot ETF. So those coins were locked, or those assets. I won't say coins because people didn't actually own the coins; they owned the ETF. But those assets were locked until the launch of the ETF. So many of the holders of the original Grayscale Bitcoin Trust had come in, as many as 10 years ago, and or more even, and uh, so they had been holding for a very long time. Were in just amazing profit, and when they launched the ETF, Grayscale did it with a 1.5% commission rate. Okay, which was way, way high comparatively to everybody else. And so what that did was put them on the fast track for some selling. And they made hundreds of millions in fees off of this. So they generated revenue out of this, right? That was by design. It wasn't an accident that they um, that they set those fees that high. They did it because they knew it would force some selling. They expected some selling because people had those assets locked up for years, and ultimately that sell off it just hasn't stopped. It's slowed down a bit, and it seems that it may actually be trending down. This is the Grayscale daily flow, and as you can see, it's been outflows since they started, and we may be trending down here with that. So that's something that we're watching here. But if we didn't have that, it would have just been. I mean, it was already a rocket start for these ETFs. Price absolutely soared after that leveled off. So this was the sell off that began. Things leveled off. By the way, this was a long consolidation period here in February in this 40 to 45K range, which alludes to something that I want to talk about here in this stream, which is that these consolidation ranges tend to lead to explosive moves. Here we had a big move to the upside, never got retested. We consolidated briefly in the 50 to 52K range and had a big move to the upside. It's never been retested. So those are still viable possibilities. But at the moment, as we consolidate in a very large range between 59K and our new all-time high at 73,800 or so, um, uh, we're waiting. The market is anxiously waiting for something to happen. Now, last week we talked about these post-halving events, how price behaved post-halving, and often we see corrections, and often we see some consolidation after these events, and this time is no different. Let me clear out the trend precognition and make this a little bit cleaner for us. Okay, this time is absolutely no different at all. As you can see in the prior halvings. Why do I have a double here? Why do I have a double here? This one does not belong. Something doesn't belong. This one does not belong. And I locked it. I'll clean that up here in a second. Let me figure out what's going on here. Sorry, guys, bear with me. I think I was. What is going on? All right. So, in any case, we see these consolidations happening, right? And so what we're seeing now is certainly not out of the ordinary. But of course, like I said, what could trigger this next move after this consolidation? And by the way, consolidation can lead to a downturn as well, right? The explosive move could go to the downside just as easily as it could go to the upside, right? However, we have this narrative that we're post halving, so we do expect price to go up. We have Hong Kong ETFs launching in less than 24 hours. That should also be a catalyst that should drive demand, although it may not be quite as vigorous and robust as the demand we saw from the US. Not because there's fewer traders. In fact, there's probably more, as many, if not more, that are anticipating this out of Hong Kong. But maybe, just maybe, they're ready to watch the market a little bit. And Fed Chair Powell is going to be speaking this week. That is a third potential catalyst for what's happening here this week. When is he coming up? He's coming up, I think, on Wednesday, right? Fed interest rate decision and press conference coming up on Wednesday. That's May 1st. And so I think the market is in a bit of a holding pattern waiting for this to happen. Nobody expects to see a rate cut or a rate hike out of this meeting. But what we do expect and what we are anticipating is, and listening for anxiously, is Fed Chair Powell's tone coming out of this meeting. Right now, some of the discussion is going to, all right, well, it's supposed to be 3 rate cuts this year. Is it going to be now down to 2? Is it going to be down to 1? Or is it going to be none? And will the Fed, Fed Chair Powell specifically, clue us into anything? Remember, he never wants to surprise the market. He's always telegraphing their intentions the best that he can. Maybe they've painted themselves into a corner. Nonetheless, if they feel like they're going to have to pivot off of the prior decision or what they've been telegraphing previously, and they've already kind of started doing that a little bit with some of the other Fed officials over the past several weeks, that's what the market's going to be listening for. And if he is overly hawkish, that will be bearish for the market. If he's dovish, he won't be overly dovish, but if he's dovish at all, that will be positive for the market. That'll be positive for ETF buyers as well. So, maybe those ETF buyers don't come in as strong. Maybe they will, maybe they won't. We don't really know, but they could potentially be, kind of taking a tempered approach until we hear what Fed Chair Powell's thoughts are coming out of this meeting on Wednesday. So maybe they get their toes wet in the water. They step into the pool and check the temperature tomorrow, and then we could see things happening and scaling over time, as we did here in the U.S. So those are just kind of some of the fundamental things surrounding the market right now that could obviously have an impact. Also, of course, there's remember the tension in the Middle East that started this move down here. What was it? I think that was about here, right? So when rockets started flying at Israel, that's obviously where we had this breakdown out of the 2021 top. And now there's another potential ceasefire on the table. That could also be very positive news if that does indeed happen. And gosh, we all hope and pray that an end to this conflict comes sooner than later. That would just be tremendous news for the market. Tremendous news for humanity and mankind altogether. Who gives a shit about the market at that point? I'll be honest with you. Let's get our priorities straight. So whatever the case is here, we do have some catalysts that could send price in either direction after tomorrow and after the Wednesday Fed announcement. What are my expectations? My expectations are actually to continue to consolidate in this range a little while until we can validate an RS flip above this 2021 top, which was 69K. This is long and storied how many times we've been rejected from this level. We can't even talk about going for a new all-time high until we can do that. So in terms of what the order book is stacking up to be, and where liquidity is and where it isn't, we still have support here at 60K, which is our primary level of support. And I'll be honest with you, it's fading a little bit. Some of that support has moved up. Some of it has moved down. What we really want to see, it's good to see it backed up here, backstopped here, and some depth to it. But what we really want to see is more liquidity coming into the upside, more liquidity, more bid liquidity coming in north of 60K to push price up. And how much do we need? How much does it take to actually get a good foundation to move up? Well, historically, we've seen a lot more than we're seeing right now. Historically, we look for upwards of 100 million in these levels to really send things moving. Could 60, 80, 90 do it? Yeah, but typically that's backed up with some depth here. So even in our last leg up, it was 96 million with another 93 below it, and another 58 below that, and another 30 below that. There was a good ladder of bids, 250 million or so, and that did it. And it works in both directions. 134 million to the upside, and resistance sends price running away. So we need to see more of this bright yellow or white coming into this range here, close to price, to send price up. By the same token, we could see a wall like this come in overhead and push price down. So the fact that that hasn't materialized yet just is a matter of time, right? This game requires patience. And so the fact that we don't have at the moment any bid liquidity, anything significant anyways, below 50K, is an indication that there's no real sentiment for that right now. There's not even sentiment for this 50 to 52K range at the moment. All the sentiment seems to be centered around this 58 to 60K range. And for me, most specifically, I'm eyeing this level here, the lower low at 59.3K. Might vary a little bit on whatever exchange you're on, but whatever the lower low is, this is the one that needs to hold. If we lose this level, I think that we will see bid liquidity moving into this range, and this is the next potential retest. So far, we've had a couple of tests of this level, and they have held. Whether that continues to be the case remains to be seen. Again, some catalysts that could send things moving in the right direction, some catalysts that could send things moving north would, of course, be some good ETF demand coming out of Hong Kong for both Bitcoin and ETH, and maybe a dovish tone out of Fed Chair Powell on Wednesday. I don't think we're going to see a green monthly candle close here. That would just be a monumental move here at this point. Let's see what that takes. Just to confirm that. Last month we closed at 71,285. That's a long way from here. So that would be a shocking move unless ETF demand out of Hong Kong is just off the charts and sends things just absolutely ripping. It would take a lot, in my opinion, for that to happen. As you can see, the liquidity overhead, and I'll dial this in a little bit, really, really heavy and dense here above 70K. Remember, our prior all-time high was at 69K. That's not even the benchmark at this point for where resistance is stacked the most, right? So that, in my opinion, is the stronger technical level in terms of technical resistance, but the liquidity-based resistance, and that really is the one that stands out. That's the one that's going to, in my opinion, probably be more firm, is the fact that from 70K, actually about 69.5, 69.6 or so, and up could be the resistance level. You see a ladder here, but it's like it's not very dense. So if price can cross this 65.5, 66K level, then we can go and start working on this 70K. But I would just be very surprised to see a successful rip through 75,000 if we don't see significantly more bid liquidity down here in this range. So that's what I'm watching at the moment, and we will continue to keep eyes on this, right? It evolves. The order book changes every single, literally by the minute. So we have to stay in tune to it to see if we can identify any changes that could potentially push price in either direction. This is kind of thin in this range here, right? And kind of thin in this range here. Remember, liquidity dampens volatility. And if liquidity dampens volatility, like we would see on this screen, right? Or this one better, right? If this is going to dampen volatility and this is going to dampen volatility, these thin zones, in my opinion, it's not even opinion, it's fact. These thinner zones amplify volatility. So this sets up for more volatility. This would be kind of a barrier to that right here at the 65.5 level, where we've been stuck here for a few days. And then a breakout above that, we could potentially go back and retest 70. But again, I want to see much more in terms of bid liquidity above 60K to really send us moving. Above 58, I guess, would be helpful. But really, to get the real push, above 60K, or even concentrated at 60K, would be very, very helpful, in my opinion. Hope that gives you some insight as we navigate through the monthly close tomorrow. Definitely a historical day as Hong Kong comes online with new spot ETFs as well. We'll get an update on what is happening here on the US ETFs. This is going to take a little while to update as those come in after hours. Let's see if I got anything coming in yet. No, not yet. It takes time for that one to populate. So we'll see that tonight. And again, be looking tomorrow for a strong monthly close, and especially going to be tuned in on Wednesday to Chair Powell to see what kind of tone he emulates, and see if we can get some more clues as we head into a new month here, right? So with that, I'm going to wrap it, guys. I appreciate the follows and the support and the comments. Please keep them coming. If you like the feed, if you like the content, by all means, please smash all the buttons, hit the subscribe button so you don't miss any of the analysis. And I will continue to keep cranking these out Monday through Friday. I do them every day. Sometimes I do more than one. So I enjoy doing them, and I hope you guys are getting something out of watching them. Thanks again for the kindness and support. Appreciate the comments. Live on and Mars Droid and Marius and Game Zone. Thank you guys for joining me. We'll do it again tomorrow, guys. In the meantime, manage your risk. Stay in this game for the long haul. Trade safe. And as always, make it a great day.